Okay, so we left off yesterday with our 10 top mineral stocks. Only got to 3 of them. That was Vale, SA, LAAC, Black, and Tech Resources. So let's move on to Newmont Corporation, NEM and NGT. So there's 2, one for the New York Stock Exchange, the other one for the Toronto Stock Exchange. I think that's what TSE is, if I am learning myself something about this. So Newmont here, Newmont Corporation. Oh yeah, and so one of the largest gold mining companies, with operations spanning several continents and a strong track record of returns, which is great. And we look here at all time when it loads, starting in 1980. Wow. Okay, so this has been around for a while, since 1980. What is that? April, I think. Yeah, April. Can't make it show up very well, but April. And it's had its ups and downs. It seemed to steadily rise. Well, actually, that's not really accurate, is it, huh? It looks like it's low in 1984 of $9.87. Okay, yeah, no, it's, you know, its lows have definitely increased if you look at that. So that's not bad at all. And its highs have definitely increased, right? I mean, its first high, I guess you could say, in 1981 of $18.07, and then again in 83 of less than that, and then didn't do very well until, what is this, 1987 in August. There was a big spike. It went up to $49.07 at the close. Opening up at 39, right? Yeah. And I guess the high was $54. And then went down and kind of steadily kept going up. Hit a peak in 96 of $57.88. Then came back down pretty fast. Within that same year. No, within 2 years. This is 1996, and then 2 years it went down to 19, which is the same as just about 1987. And it stayed there, kind of went down again, and it came back up in 2002 to 26, but still didn't hit its 96 high of 57 until 2005, and it didn't even hit the same high in 2005. It hit 53.40. In 96 it was 60. It closed at $60.25. I know I'm looking way more at this data than the other ones, but I think it warrants it just because there's so much historical data. It's interesting. You know, this company, Newmont Corporation, was public in 1980, and it's still going, still making gains. Highest gain in 2022 of almost $80. And yeah, that's pretty interesting. But let's look at the financials, because that's really what we're here to dig into. The total revenue over the past 3 years, that's the data that we have here on Yahoo Finance. It shows that it's increasing slowly, backtracking, but that's okay. I mean, we see that. And I think in 2021 we were seeing some stuff like that, where there was these spikes in revenue and then they went back down. So 11 billion, because remember, Yahoo Finance shows us in the thousands. So this is, you know, this is 497 million, and this is 11 billion. So $11,497,000,000 of revenue in 2020, and it's gone up to $11,812,000,000 in 2023, and it looks like 6 months ish, right? So it's not doing great. If I'm looking at this right. Okay, no, I'm probably misinterpreting that. I gotta get better at these TTMs. It's not, it's literally just the last 12 months, unless they start the clock at the beginning of the year, which from what I read yesterday, that's not the case. So, what we can say is, I don't know. That's what I can say. I have no idea. And we can look at the total expenses year over year, and so that's, oh yeah, and here's another interesting thing too, the net income from continuing and discontinued operations, which is not great. I mean, they went from a positive number to a very large negative number, $2,675,000,000. Well, okay, that's the TTM. 2 billion. Right? Yeah, 2,494,000,000. God, am I doing that right now? Now I'm confusing myself. Yeah, because that's 1,000. That's a million. That's a billion. Okay. Had to check myself there for a moment. But let's see, and the total expenses, that's probably why. I mean, the total expenses for this company are growing really fast, so hopefully that just means that they're expanding their operations. I'm guessing that's what that's indicating here. Because we go from 8.4 billion in 2020 of total expenses to 11.1 billion total expenses in 2023, and the total revenue is just not keeping up with that. And I mean, it is keeping up with it by 700 million, but I don't know how many employees there are. But what does that cover? How much do the jobs? How much does it pay for these jobs? Let's look at the balance sheet here. See how responsible they are with that money each year. Nothing for 2019. Not really sure why they even have that there, but yeah, maybe at some point I'll upgrade and we can just get, wow, that's crazy. Upgrade to begin using 40 years of financial statements. That would be awesome to see all that data, but I'm not going to spend money on that right now. So their total assets have gone, and we can look at stuff that's not just things that they could maybe sell, because that's what they're including, right? Your car, your house, total assets. That's what this is. These things, this is more what they have. So 290 million short-term investments, so they can pull that out after that investments, and cash equivalents, which I don't know what the equivalent are. Maybe gold itself. Who knows? But that's not bad. Like 5.5 billion, 5.54 billion in 2020. But that's not great, in my opinion, seeing that reserve go down. It dwindles. I like seeing that reserve go up for cash. Interesting though. So the cash has gone down, but the total assets have gone up. So they're leveraging that to stuff that is a more amortized as valuable or something. Okay, I'm making a big assumption there, but they've invested this capital into something that pops up into the total assets, it seems, somehow. So that's interesting. And then we look at the total debt, which is increasing. It is good to see that the total debt is so much less than the total assets, but still, you can't really pay bills with assets. Or you can, but then they're gone. So really, what they have here is I'm guessing. I mean, I could be way off here. Still, I'm learning this with you guys, so you know, feel free to tell me what you think about this. In any case, I find that highly interesting. I do, though. That's why we're doing this, right? You know what? Let's just keep it American, bruh. Let's not look at the Toronto Stock Exchange. I feel like that's gonna get us sidetracked. I'm sure that's interesting. We can do that. And it looks like one of these we're gonna have to. First Quantum Minerals Limited, but we're not there yet. So that's that, and that was the Newmont Corporation. This other one, Agnico Eagle Mines Limited. That's what we're going to look at next here. And they're all time. Wow. Okay. So, wow, they're even older. 1973. In February 1973, they hit the market at $3.88, and they had a trade volume of 179,000 people doing trades that day. That's cool. And now we're up to $65, so they've come up quite a lot. And this is a different kind of, well, let's back up. So this is another major gold producer with significant operations in Canada, Finland, Mexico, and Australia. So gold producer, not really sure if it's mining or refining. Maybe it's both. We could look at that, but I kind of want to just cover the financials of these things. So we'll stick with that for now. But if you want me to go into details about other things like that, read those articles, read blogs about them, I definitely will. We're just going to start, you know, we're going to dip our toes in, start here, by just looking at financials and making conjecture. Because that's what it's all about, right? Okay, so the financials. If we look at 2020, they had a total revenue of $3.1 billion. You know, and all this other stuff right here. It's interesting, it's very exact, because sometimes you'll just see it zeroed out after millions. So that's kind of cool. And it's increasing. You know, it's over doubled. The revenue has doubled in 3 years. Since 2020, at 3.1 billion. In 2023, at the end of the year, it was 6.6 billion in total revenue. Now, I mean, you know, we can break that down more. I guess it's the same operating revenue and total revenue. At least the way that we're seeing it, this visualization, that's all we're gonna get, and that's fine. The total expenses here, not bad. It's tight. It's tight, you know, neck and neck here. You know, just a billion less for expenses, it seems like, each year. This year, though, they did really well. Not this year, this last year, 2023. Well, it's about the same. No, because that's 3.1 billion total revenue and 2.3 billion total expense in 2020. So what is that, like 800 million, a 0.8 billion difference, and that's a 1 billion difference, right? That's good. That's it's even better. So that's a I will just call it 1.5. It's like 1.4 billion difference, and then this is and I apologize, my math is slow, to 1.8. So I mean, like, it's going up, staying high. The difference, it's tight. It's not as high as some of the other ones we've seen, but it does seem like they're doing something right here, increasing that revenue. And not having too much expenses, not expenses that are overloading them and going to the negatives, because we saw that with the last one with Newmont Corporation. So their total assets, we can look at their cash and cash equivalents, because that's always fun to see too. But the total assets have increased. That's fantastic. Oh wow, they went up a lot. So I don't know what they were doing there. The cash equivalence has come up a considerable amount too, from 3 million to 10 million, and then the total assets from 9.6 billion to 28.6 billion last year. So 2020 to 2023, it's a pretty big increase. It's like 4 times. No. Yes. Math. Anyways, total debt is not bad. In fact, total debt is really not bad at all if you look at the total assets they have. But the cash doesn't cover it. I think we saw that with the last one though, that the cash wouldn't have covered it. Which, you know, basically means they'd have to liquidate all these assets, whatever they are, all. You know, so some of them, you know, millions of them are just cash and cash equivalents. That makes sense. Receivables. So, I mean, this is stuff that's not been gotten yet, or I mean, what does get gotten gets received. Inventory. So this is just raw materials that they can sell. They carry like 1.1 billion in raw materials last year, and finished goods 237 million. I mean, this is how they're counting up the numbers. Obviously, it's an evaluation. It's probably decently accurate, I imagine. Yeah. So not bad. You know, they'd have to do some liquidation if they really needed to get out of that debt. And it is increasing. They drove it down in 2022 by about half, which is nice. And then it's went way back up here in 2023, but still manageable if they liquidate their current assets, as it's being called here, which is cash equivalents, receivables, inventory. Is the current assets. Okay, so that is awesome. I'd say that Agnico Eagle Mines Limited is pretty nice. You know, they might not be making quite as much per year, but you have to think about like what balance are they striking? You know, is it reasonable? Is it sustainable? If they take a hit, do they have the cash, or do they have to sell shit off? Do they have to sell people off? You know, do they have to fire people essentially, or minimize their hours and you know all that stuff? That's all in the news all the time, isn't it, these days? So let's do this one here. This next one, and again, I am just reading off of what ChatGPT told me when I asked it for the top 10 mineral companies, but it's taking a long time to analyze just a very minimal amount of data here. Okay, so this one's called FM, which, and it's Toronto, so I don't know if this is the right, this is an ETF. Okay, this has to be at FM. Yeah, I think that .to just means Toronto. I guess. I mean, what is TSE? TSE. Okay. No, wait. Verse NYSE. Yeah, okay, it is Toronto. Ha! I knew it. Okay, so they had a bad day, but that's just a day. Okay, so they're, you know, okay, what is this, right? First Quantum Materials Limited, primarily focused on copper. This company has a diverse portfolio of mining projects worldwide. So yeah, I did actually hear that copper's kind of taking a dive right now, so I wouldn't really worry too much about that if you think about it, unless we find a new medium to pass electricity, and I think it might be used for like heating. There's just a lot of applications for copper. You know, you can make shields out of it, right? With tin, and then make bronze shields and swords. No, I'm kidding, but it does have applications, right? So I think, you know, maybe we're just seeing another one of these trends. 2008. Oh, it's the dip. It's another dip. I'm kidding, but I mean, I'm kind of being serious in a way. 2016. And again, like, this is good to evaluate, but these are the valuations that people are making. This is how much they're willing to buy it for. You know, how much you're willing to buy a house for, or a car, or whatever, a sandwich, or this piece of this company. And that's why I think that this is cool. And obviously that's what you're getting out of it as a consumer, as a investor. But this is how I like to evaluate these companies. You know, it's a really cursory, high level, not understanding a lot about economy and finance, because I don't. I just try to use a little common sense and read up on stuff, and we'll dig into that. You know, I'll read some articles in a different video, but right now, let's just finish this up for another top 3, huh? So the total revenue has gone from 5 billion, we'll just call it that, in 2020 to 6.456 billion in 2023, which is nice for that total revenue. You know, seeing these negatives, I don't ever like seeing that, but I think it can mean a lot of things. I mean, well, it means what it means, right? Their net income, their net non-operating interest income expense is negative. Oh, okay, that actually seems like a good thing, right? Their income expense. So, I mean, it looks like their negative income expense. Well, I'll just look into what that means another time. Maybe offline, huh? Total expense, though. So total expense has not exceeded the total income, total revenue each year, which is fantastic. So they're probably saving money, some cash equivalents, some cash, whatever. But that's a good ratio. It's about 1 billion. And that's like over 2 billion 2021 for how much more they're making than they're expensing. That's 2, and then that's, so 2023 was kind of a bad year. I mean, not really, like they still made if I made that much more money, if I made $1.1 billion, but 1.1-ish billion dollars more than their expenses. I think that's pretty good. So it seems like they're responsible with their money. And if we look at the balance sheets for First Quantum Minerals, and see, I mean, that's what's great. There can be hard times, but if they're good with saving and investing and not overexpending, but also expanding properly, that's, you know, they're good for the hard times. And it looks like they keep a lot of cash on hand, like more than the last company that's been around longer, which is interesting. Can't really blame them. You know, it's good to have $1.157 billion of cash and cash equivalents just laying around, right? But yeah, 2020, they went from total assets of 24 billion to total assets of 23 billion in 2023, which maybe they were just liquidating some stuff to make it into cash, because they went from 950 million to 1.1 billion 2020 to 2023. It's hard to say without looking at every single line item, and I'm not going to do that right now. So let's just look at the total debt in comparison to the assets. And again, I mean, you know, it's good to know this, but again, they would have to liquidate, right? That's, unless it's all cash or the total debt is lower than the cash, then they're liquidating these assets to cover that. They would have to. In an emergency, that's all I'm saying. I'm not saying that that's what they're doing year over year. I doubt that. That'd be crazy. But that's great. Look at that, 24 billion total assets in 2020 and 7.4 total, 8.3 billion total debt in 2020. And then they ended off lowering that. Actually, it's lowered from there. Stayed around 7 point something, you know. But it's in the low 7.53 area billion for expenses, for debt. And their total assets has stayed pretty steady. It's gone down. We'll see what this next year holds in store for them. But that's all I have for y'all today. This was informative for me, and I will link these stocks again. And I hope you have a great day. Bye.